You're listening to the Lama podcast. I'm Gunjan.
I'm Rajiv.
I'm Ajay.
Hi, Ajay. For my listeners, I just want to tell that Ajay, he's my cousin, and I requested him that if he can just come and talk about money matters. There's this small interpretation that I have about Ajay. This song, which is going very viral, Kal Raat Aaya Mere Ghar Ek Chor, and then someone is telling him that, okay, tu meri neend bhi le ja, mera chain bhi le ja. And I was thinking, if that thief enters Ajay's house, Ajay will be like, okay, we can sit, we can talk. Tell me, what will you do with this money? And then he'll ask questions. You put all your eggs in one basket. You don't put all your eggs in one basket. Both strategies are correct. You need to see what works for you. And then he'll give him books like Intelligent Investor, Psychology of Money, Black Swan, give him all the gyan, and then he'll do all the market research and he'll come and say, Ajay, I've invested all my money in FDs. And then Ajay will be like pulling his hair and telling him, get lost. I don't want to see you. Please get out of my sight. This is my interpretation about Ajay. Over to you, Ajay. A short intro.
No, but I want to interject. I thought that you would say कि अजय के घर चोर है तो क्या ये भी ले जा हो जाला कि मेरा पैसा मत लेके जा. But yeah, over to Ajay.
ना आए चोर तो अच्छा है. I don't want thieves at my home. पर वो अगर आएंगे तो उनके लिए बुक्स ही मिलेगी, उनको और कुछ नहीं मिलेगा.
Which you'll happily give.
Or maybe yeah.
I'll put them under lock. I'll put them under lock. I don't give my books to anyone.
Talking about money, it's very important that we don't only discuss about how money is to be invested. The right approach should be how money is to be set aside. Most of the time I speak to young people, and I have the entire spectrum as my client. Say I have 20 odd years of experience in finance industry. I worked as a banker for almost 17 years. I handled bank branches. I set up wealth management services. I was even regional head in North India for a specific product. So I've done it all. 2017, I decided to move on. That was the year I decided that enough is enough. Not because I wanted to quit a corporate job. I was doing well over there, and corporates have also done pretty well in disseminating information. But then there was something which was going amiss. What are the corporates or the banks doing? I used to imagine, and what happened, what used to happen is, whenever an investor would enter a bank branch, invariably the investor would be offered a life insurance product as a solution to their needs. It was actually used as a panacea. कि भाई आपको कोई भी बीमारी है, आप लाइफ इंश्योरेंस ले लो, आपकी नीड पूरी हो जाएगी.
So, like, don't worry about your life. At least, the whoever is left behind will be taken care of.
Right, but then life insurance not as a risk management product, but as an investment product.
Interesting.
Yes, and that is what created the need for me to step out. The other aspect that I used to see is relationship managers, whenever they would speak to clients, if a product would have been already sold to the client, they would say, "Ye wala to acha nahi hai, ye wala acha hai."
Yeah, wherever they get more commission, right?
It's not about commission. It's about how their performance review was taken place.
Exactly. Yeah.
See, the performance review of relationship manager in national distributors or banks used to be on quarterly basis or annual basis, and monthly incentives would be paid out to them. What this would do is that the relationship managers would generally want to sell more than retain a relationship. So वो हर बार पुराने प्रोडक्ट को कोई ऐसी बात बोल के कि भाई इस प्रोडक्ट को छोड़ो, आप नया ले लो. So insurance world over is sold. It is bought. It is a morbid product. Let's be frank about it. Who would want to talk about their own death? So it's more about being sold. And somebody who puts in the effort, it's a lot of effort would go into selling an insurance product. So the insurance as a product would pay out higher incentives for the first sale. And banks would be keen on it because that is a revenue grosser. And a client is already tied up, say for 10, 15, 20 years, the client would be paying the premiums and they would carry on. So the relationship manager would look forward to the next sale. Whether he was doing the right kind of advisory, the need assessment, or whether he's trying to understand the finances of the applicant or not, whether there is a need of insurance or not, was not done, or whether the right insurance need was there or not, was not done. Generally, it was only sold from the revenue perspective or the incentive perspective. That is what I saw. Others may have their own view about it, but whatever was my observation, that led me to quitting my job because I saw a gap in the industry. Somebody who's investing money is not investing money for today or tomorrow. He's investing also for long term. Say somebody who's getting out of college at 24 to 30, maybe that person remains single, then gets married, has kids. By the time the person reaches 45, there is responsibility towards their own kids and towards their parents also. So if the person does not begin early, he will never get time to save money. A relationship has to be more than 10, 15, 20 years and not 2 to 3 years, which generally the bank relationship managers were offering.
Looking to ask that, when you started dealing in this domain with end customers and all, so what did you see was a driving factor about money? Now, you talked about like a life insurance and all that. So people would come in. Obviously, if I'm a single income family, right? So I'm working, my wife is not working, or vice versa in today's state. Then whoever is the breadwinner would be worried about, hey, if something happens to me, then life insurance, that's the fear factor that life insurance works on, right? But the question is that let's say that the couple is working and you are talking to them. In your experience, what has been the key question or type of questions that people ask? And what's your perspective on, hey, why are you asking this question, or how to perceive money more than just putting it in the bank or investments or anything?
Right. I'll just give you a brief background about it. Say, generally, investors, the traditional investments that were made in India, investors would invest for a short duration and money would go into the bank. So, suppose they had an amount which could be put aside, they would put it aside for a year, take the interest along with it. Say, suppose 100 rupees was invested, 7% is the interest, 107. Next year, they would add 3 rupees to it, make it 110, whole number, and then another fixed deposit for 1 year. And this could carry on for 10 years. They didn't require the money for 10 years, but they would be putting it on a fixed deposit for a year only.
No, but you see, that's okay. But my question is that, what's the, why, so why to say, what are the driving factors behind that?
Right. So what I used to explain to investors is you do not require the money, all your savings at the same point of time. You would be requiring some money at different stages in life. Right. So you have a retirement need, which is 30 years hence. When you're 24, you're not thinking of retirement. Right. You're not thinking of parents getting old when you're 24. You just want to have good time today. You want to spend money. But all the money that you spend today is gone forever. And then when responsibilities come to you, you will have to only do with whatever you are earning at that point of time.
Very well.
And if you still do not get into the habit of saving, suddenly those responsibilities would magnify. And if we look at life stages, 24 to 30, one is single. 34 to say 36, getting married, having kids, getting comfortable with life, enjoying with them. Suddenly you're 45, 50, and then retirement is just 10 years away or 15 years away. And at that point of time, two problems occur at the same point of time. Your son is pulling you one way, and your parents are pulling you, or your parents may not be asking for it, but you have your responsibilities, love and affection towards them, and you want to do something for them, and you are stranded at that point of time. Not strangled, okay? Still alive. So you have to plan early, because we have, as a country, if you look at, we have moved on from the joint family setup. So responsibilities are not shared. Responsibilities are on your shoulders. Only one who is sharing it with you is your spouse. So what you have to do is, what one individual should do is, as soon as one gets into employment, even a small amount, set it aside, start setting it aside, get into the right habit. What I'm talking about money is, it's not about calculation, it's not about returns, it's about getting into the right habit.
Okay, so you're saying that the habit of what we call a SIP, right? The systematic investment plan, whether it's a systematic saving plan or whatever you might call it. So essentially getting to the habit of putting some money aside for future.
Right. If I give you a perspective, the kind of returns that Indian capital markets have generated, if you start at 24, for your retirement planning, you start with just 1,500 rupees. And in 30 years' time, the SIP, if you start with an SIP of just 1,500 rupees for 30 years, you can accumulate the amount that you would have in say 30 years' time would be around 1 crore.
And this is purely on save, like FD kind of thing, not aggressive investments.
SIP is capital market, which is equity markets I'm talking about. Okay. So at a say 15-16% CAGR, this money, 1,500 rupees per month for say 30 years, will become almost a crore. But if you procrastinate, say 24 to 30, you have a good time. Then 30 to 36, you have kids, you get married, you have kids. And then at 39, you decide कि अरे अभी शुरू करते हैं 1,500 रुपए. हाँ, आप 1,500 से नहीं शुरू करोगे, 15,000 से शुरू करोगे. तब आपको सेम पॉइंट ऑफ टाइम पे 1 करोड़ रुपए होंगे. So if you had to begin at 24 with 1,500, you would have a crore at 54. But if you begin at 39, you will have to start an SIP of 10 times the amount initially. So 15,000.
So as the tagline says, mutual fund sahi hai. I think that is a lie, because when you invest in stock compared to when you invest in mutual funds, there is a difference of return that you're getting. Now I understand that it depends on the journey that you are carrying, and then you need to know about the company, then you need to know about the principle of the company. If you don't understand the company, don't invest in that company. Does this generation really have that much of time to invest studying about the market? And that's where mutual fund managers come in. But again, can you enlighten us a little bit that when we come up with this, when we hear this tagline a lot, mutual fund sahi hai, is it actually true, or is it again just some marketing line?
Okay.
Just to appeal investors.
Okay, I'll just talk about that. Mutual fund सही है, पर कौन सा किसके लिए सही है, ये ज्यादातर लोगों को पता नहीं.
Exactly my point.
So it's not about गलत या सही, it's about कौन सा आपके लिए सही है. मैं ये कहूं कि विटामिन सी की गोली खाना सही है, पर कितनी खाना सही है, किसके लिए सही है, ये तो आपको डॉक्टर बताएगा. ऐसे ही you just keep popping it like every other day, it may not be benefiting you. आप विटामिन सी नींबू पानी पी लीजिए. राइट. तो लेकिन अगर आपके लिए अभी ऐसा है कि देयर इज अ डेफिशिएंसी, मैंने विटामिन सी कहा, मैं आयरन डेफिशिएंसी बोल सकता हूँ, कैल्शियम डेफिशिएंसी बोल सकता हूँ, कोई और विटामिन डी की डेफिशिएंसी इंडिया में सभी को है. बट आपको उसके लिए प्रॉपर टेस्ट कराने पड़ेंगे, पता करना पड़ेगा कि एक्चुअली में डेफिशिएंसी कितनी. किसी भी चीज का एक्सेस होना, आयरन का डेफिशिएंसी होना नुकसानदायक है. आयरन का एक्सेस होना, मेरे डॉक्टर ने बताया कि वो लिवर को हर्ट कर सकता है. So excess भी
right dosage for the right person, and only that professional can tell you.
Right. अब मेरा एक क्लाइंट है, वो मुझे कहता है कि मुझे 5 करोड़ रुपए का रिटायरमेंट प्लान बताओ। मैं जब 60 कहूंगा 5 करोड़ रुपए मुझे चाहिए, क्योंकि मेरी अभी एक्सपेंसेस इतनी है, उस समय इतनी रहेंगी। एक्स्ट्रापोलेशन के बेसिस पे वो वर्क कर रहे हैं। तो मैंने कहा कि तुम्हारी जो करंट सेविंग्स हैं, उससे तुम जिस अमाउंट पे पहुंच जाते हो, उससे तुम्हारी लाइफ चल सकती है। तुम 3 करोड़ में भी एक कंफर्टेबल लाइफ एनुइटी का अच्छा से जी सकोगे। 5 करोड़ पे क्यों जाना चाहते हो? नहीं, आई वॉन्ट टू कीप अ हेज, आई वॉन्ट टू कीप थिंग्स सेफ फॉर मी। उस समय कौन कमा के देगा? हमने जो कैलकुलेशंस किए, जो करंट लाइफ स्टाइल है उनकी, उसके हिसाब से मुझे लगता है, और जो 60 पे उनकी रिस्पॉन्सिबिलिटीज होंगी वो रिड्यूस भी हो चुकी होंगी। आज बच्चे हैं तो उनके लिए एक्सपेंसेस वो पे कर रहे हैं, आज पेरेंट्स हैं तो उनके लिए एक्सपेंसेस पे कर रहे हैं। 60 पे जाके बच्चे अपनी रिस्पॉन्सिबिलिटी खुद ले रहे होंगे, उन्होंने घर खरीद चुका होगा, उनके पेरेंट्स की रिस्पॉन्सिबिलिटी हो सकता है तब तक डिमिनिश हो चुकी होगी। तो सारी चीजों को देखते हुए मैंने कहा कि इतना ज्यादा पैसा आपको जरूरत हो सकता है ना हो, लेकिन उनके मन में जो भय है उसके कारण वो ज्यादा सेव कर रहे हैं। अब क्या ये सही है? मैं ये कहूंगा कि ये गलत है। यहाँ पे
So actually,
यहाँ पे
that
सही नहीं है ये,
yeah, I know you raise a very interesting point because
because
uh,
your life is not going to come back, your youth is not going to come back. आप सारा पैसा बचा कर जमा कर किसके लिए जाना चाहते हो?
yeah, because I read it somewhere, and actually this is a debate I have at my own home many times, that over saving is also not good and similar to overspending. So,
Right.
I think Gunjan, we discussed this in one of our earlier episode, right? That you should keep living as you are also saving, and also you are investing and planning for the future.
That
So you cannot let
frugality
go of
should,
your present.
yes, that frugality should be there, but it should not be like that. Now is the time when I tell even my parents, अब नहीं तो कब. When you
Yeah.
start living your life, किसके लिए छोड़ के जाओगे?
Yeah,
So I tell
because
them.
I think I shared this story, but Ajay will relate to this better. That I have a good friend of mine, Roger Malloy, who is in Canada, and he was part of our team at Intel, and we were having a very similar discussion. That one of the persons said that, hey, want to save X million dollars for retirement, and the person was literally, like you said, like stingy to the core and not living the life during the youth. So Roger told him that, okay, if you have X million, would you be enjoying the world tour on a wheelchair, or something like that? So I'm just paraphrasing, right? So the main thing is that you cannot keep over investing for future,
Right.
and letting go of your present.
Right.
But yes,
And second, the other thing that I caught on is that your clients had 5 crores, or that particular number, and they assume that their lifestyle will be the same what it is today. Their liabilities, their expenses, and everything would be the same. But they did not, like you were saying, that they did not take into account that a lot of the responsibilities and liabilities may go away, and they do not really need that much of money. So, but it's good that you said that, because most of the time, what I have heard financial advisors telling us is that you need to save even more than what you're anticipating. So
I
I'm glad to
remember.
hear that you have a different view, which is more pragmatic view, which I think your clients would appreciate, that you focus both on the present and the future, and not just over invest for the future.
Right.
Yes, and then someone said this to me कि भगवान का सेंस ऑफ ह्यूमर बहुत अजीब है. वो जब चने देता है तो दांत नहीं देता, जब दांत देता है तो चने नहीं देता. So
Yeah, exactly.
So invest wisely, spend wisely.
Right.
Because once the time is gone, it's gone forever. You cannot bring that
Yeah.
back.
Yeah.
So however much money you have in your wallet, you just can't buy back time. So
Exactly.
I keep telling my clients, if you've made money, say the last year has been exceedingly good for equity market investors, and some of my investments, have been, say, almost doubled their money. Some of my clients have almost doubled their money by investing in some of the advices I gave them. Now, if they've doubled their money in say 1.5 years' time, it's good enough return. Generally, that kind of return is expected in 5 years' time in equity markets. But if you doubled your money in 1.5 years' time, take out some money and have some good memories.
Go on a vacation.
Yeah, have
Go
some
on
good
a
memories.
vacation.
Don't,
Exactly.
yes, going on a vacation is more important than buying some physical goods.
Yes.
Because memories would still be, you cannot create memories all the time. You can still be creating physical infrastructure at 60, but you can be creating the same memories when you are, say, 25, 35, 45, and you cannot compare it to anything which is physical.
Yeah. I always say that, gather more experiences than paper.
So if my clients make money, I ask them to take out some and go for a vacation.
Good. So, let's explore on some of these things, because, your approach to money appears to be not very conventional. Because if I come from Indian background, but, I also have invested I do my own investments and all that. And for example, my father started doing trading literally when he was like in late 60s. Why? Because he thought that, I'm settled, my sister is settled, so now he could play with the money. But before that, he was like only FD, only fixed deposit. And even my father-in-law, never invested in the market, even including mutual funds. So there was that, you can say risk tolerance of the earlier generation was very, very low. We grew up with that.
And there was a mindset as well that investing in stock market is like gambling. Nasha.
Yes, it is today. Yes,
it's same as getting lottery tickets. It's the same thing that, someone will take you to a rehab center. People will, and it has happened in India that people invest and then they just don't calculate the risk appetite. And then we see the number of suicide cases that go up and market falls down. And people don't die because of hunger. People, they die because of financial debt. They just take their life, which is really sad. But it happens, and it is the harsh reality.
Actually, we take things in isolation. Say some of the concepts that work wonderfully in the markets, but individuals generally take those concepts in isolation. Say averaging for that matter. Say some people who just get little information about the equity markets, they start buying shares. So something is available at 1,000. If it comes down to 800, it's at a discount. But why did the market discount its price? They are not questioning that. So they go into a concept, let's average out the price. The stock can continue falling. Okay, so 800 to 600, they're still averaging. 400, still averaging. Why are you averaging?
Exactly.
Why are you not questioning why the market is not ready to give the earlier price to it? Has the earnings of the company gone down? What has happened to the company? Is it not able to sell its products? Or the competition has taken it into the corner? What has happened? Nobody is questioning that. They are just looking at the stock price only. This is not the right kind of investments. When we were doing our MBA, such an instance happened with us. There was a company called Silverline. It started its stock price fall from 1,300 rupees, and I think it fell down to 13 rupees. One of my friend who thought that, okay, averaging is a good concept, it will work. No, it does not work on a single security. It may still work on a portfolio of securities. So he lost his money over there. He started buying at 1,300, and say after some time, his pocket money or the money that was available to him is fizzled away, and his strength also fizzled away. But it fell down to such a level. The company was not able to pay its. This company was into information technology, and it was able to pay its employees for the previous 6 months.
Yeah, it's the same. We had the same situation with Kingfisher, right? So it went, but yeah, the concept that you're talking about is throwing good money at bad. Like you made a bad decision and you're keeping, you keep with the hope that it will turn around and you keep throwing good money at that bad decision.
It's a good averaging is a good concept when it's a portfolio. Systematic
Yes.
investment plans, SIPs, when you are putting your money, you are actually banking on this averaging concept. So what happens in an SIP is it's a portfolio of stocks of say 30, 40, 50 companies. And the fund manager would have invested in at least 5 to 7 different industry segments. India has 18 different industry segments. So 5 to 7 well-researched industry segments. If the market falls, the market will be cyclical, it will go up because we have the population, we have the demography, our GDP growth rate, and so many different factors. We have a young population, all that things will definitely take the stock market, cyclical stocks, again in the upward journey. Now, if you are averaging when the market is going down, you will reap the benefits when the markets come up. See, in a 10-year period, if your average buying price of units is 50 rupees, and if your average selling price at the end of the 10th year, around the 10th year period, is 150, you have tripled your money over the entire journey. So you invested, say, at 50 rupees, you got out at 150. Your money tripled. That is what works in a portfolio of securities. It does not work in individual security. But if you apply that, now I'm talking about same period of time, a mutual fund does research on securities, but it does research on say 40, 50 different securities. Some of the people who want to make a quick buck, what they do is they look at the portfolio of the securities and buy a particular individual security because mutual fund may have done research on it. Yes, mutual fund did research, but they also kept in other securities in conjunction with it. For example,
they're hedging their bets. Yeah, they're hedging their bets and balancing the portfolio.
Right. So they may have bought securities of a company which is manufacturing sunglasses. Right. But they also kept a company which manufactures raincoats. So God forbid this year the rains came earlier. The sunglasses company will not be in profit. Your bet on that individual security, because the mutual fund company bought it, is going for a toss.
So you're saying that the mutual funds are a safer investment for novice,
yes,
or people who do not want to do research and all that.
People who do not have the wherewithal to
do the exactly.
research themselves.
And I have a question here, like in market, in life, certainty does not exist.
Right.
But it sells. You can sell certainty. When is the right time to stop, make a U-turn and run in the opposite direction? When is the right time to do that?
Buy to sell.
Say if I talk theoretically, say how do you know the market is overpriced? Okay, so market cap to GDP, the overall market capitalization of all the shares versus the gross GDP of the country.
Right.
Price to earning ratio, price to book value. These are indicators which can tell you, okay, the market is now overpriced. So today the index is around 22,500, 700, hovering around that range. 10 years back, it was at a different level altogether. And every time you will have an all-time high. So even 10 years back, should you have not invested in the markets? It was at an all-time high even then, probably. No, it's not about numbers. It's about price to book value, market cap to GDP. Because as a country, we are growing. Say the purchasing power of individuals is also increasing.
Yes.
And as and when the purchasing power of the individuals increases, the products that they would require would also change. Today, we are $2,200 per individual. 7 years hence, it will be $4,500. Now, when your income rises, you would ask for different products. Initially, basic needs, then maybe some comfort, then luxury.
Yeah.
What is the future going to be like? If that is what a fund manager has to imagine. What is going to be the future and which companies are going to provide those services?
So, see, the one thing that you mentioned around the theoretical like indicators, P ratio, and all this stuff. There's a very good book called Psychology of Money, and this guy that talks about And the statement that caught my attention was that the decisions around investments and everything is not made by people looking at Excel spreadsheets or charts and all that. The decision is made over a dinner table, talking to your parents, your
Right.
friends, over a glass of wine or a dinner or whatever. So so when you deal with people, then I'm sure that you talk about numbers.
Right.
Like you're talking to us, right? But the thing is that in reality, let's say if you are giving advice to yourself, what advice would you give to yourself?
Right. So what I do is I do not talk numbers. I'm talking numbers here because this is theoretically. What I tell to people is somebody who is young enough, he still has time to recoup. Okay, somebody who starts at 24, he has to, even if he takes extraordinary risks in life, he has some time to recoup. Say at 24, the way you used to ride your bike, do you ride the same bike today or the way you used to ride the bike?
I don't ride a bike at all. It's a suicide mission.
So what I would say is, say at 24,
I do, and I've injured my foot already.
so,
But yeah, go on. Yes.
so biologically, you continue to grow till 27. After that, till 40 probably, and then the decay state process takes place. So as for human beings, so for human products that human beings have made, same thing would happen. That is how you should be handling your investments also. You can be taking certain risks when you are early on in life. If at all you have a crash or you come across a loss, you can still recoup. But you cannot be recouping it when you're 55. Because you're
But you see, here's a contradiction that I want to go a little deeper on. What you're saying is absolutely right. I give the same advice to my children because they're in the same age group, around between 25 to 30, and I tell them that take more risk because you have longer time to recover from the risk. But when I reflect back, and I think that how I was raising my children between the age of like 7 through 20, I was always enforcing that don't take risk. And now suddenly I'm switching the message to start taking risk. So, wouldn't that not create like a cognitive dissonance that, okay, suddenly you tell your children, and even if you generalize that our society, enforces risk averseness in our children. And suddenly now you tell them, hey, start taking risks. So, how do people react to that when you talk to them?
No, people take it positively. There is a sea change in the way people used to think 10 years, 20 years back and today. There's a sea change. So as a parent, I must tell you, my son is into engineering college and he's into a good enough engineering college to get him a good job. Some of one of the CEOs of big technology company is from his institute. Okay. So of course, so the institute is recognized. That is what I can say. Now, I told him, you take some capital from me and try to do something which is radically different than what you have been thinking till date. Don't think about a job, get into some business. And probably if you are into electronics and electrical, try to do something which is in aeronautical or aerospace. Learn more, explore more. Probably you still have time to recoup that. And most of the current generation is also getting into that mode. But
that's good.
But yes, taking risk does not mean that you should forget the basics. With a knife, you can either cut your finger or the apple. You should not be cutting your finger, right?
And the apple together.
You should only cut the apple. So you have to be cautious also. Risk taking does not mean extraordinary risk taking.
Yeah. Informed risk taking versus blind risk taking.
You have to take leap of faith. Yes.
So that is what I advise my investors also. Yeah, we are going in for diversification. Diversification will help you. Say even in the bad market scenario, 2020 was a bad market scenario. Everything was shut. No business was going on. But still, pharmaceutical, chemical, and IT industry, IT enabled services, they were making money. And that was a good time for these businesses. So even in bad times, even in war times, there would be some industries which would be doing good. So what I advise my investors is, let us diversify your investment and let us keep it for long haul. Your short term.
So, yeah. I was going to ask that, the theme of our podcast is that, we lie more to ourselves than to anybody else. So one of the things that we want to explore is that, what are the lies we tell ourselves about money? Or what are the lies that the society tells, us about money? So one of the things that I know, which we already covered, is that, investment is like gambling, like what Kunjan was saying, which I think is the biggest lie. Everything is a gamble. You walk out of your, the door, you wake up, it's a big gamble. So that is life, right? So
I think going to bed is a big gamble, whether you wake up or not. Whether you wake up or not.
Yeah.
So it's like you say, you have to have hope. You have to look at things positively. That is what I say. If everything is going to crash down, if the sky is falling down tomorrow, then you will definitely cocoon yourselves under the sand. You cannot be, and by just putting your head under the sand and letting your body be out, you cannot be an ostrich to it also. You should be aware of what's happening. So when you are making,
it's Warren Buffett actually tells that, and his investment strategy has been that, you buy when everybody is selling and you sell when everybody is buying, right? Now it's a very, theoretically it sounds very good, but then the greed factor and the fear factor comes in. So so how do you recommend your clients or, or the listeners to the, this podcast, how do they overcome this? How do they actually unshackle themselves from the money matter lies about safe investment, risky investments, gambling, and all that stuff?
Right. Now I'll give you 2-3 analogies. Okay. Now, if you're talking about Mr. Buffett, and let me talk about somebody who is at, say, very basic income level. Okay. Mr. Buffett cannot double his money overnight. But I know poor people who can double their money overnight. A peanut seller, he goes to wholesale market, buys peanuts at wholesale, 100 rupees a kilo, and he starts selling it at, say, 20 rupees per 100 gram in front of, say, some park where, say, couples are having a good time. And he can be selling it. So he bought a kilogram at 100 rupees, but he can be selling 100 grams at 20 rupees. And by the end of the day, he has doubled his money. That is possible for 100 rupees.
Small investments, selective investment.
That is not possible for $100 billion. You cannot do that.
And long term.
Right. Now I'll give you another analogy. You have a Maruti car, okay, and you ask me to deliver something to somebody in a very constrained area where the roads are not proper, and maybe somebody can put a scratch here or some dent there. But you can ask me, you can give me the keys and go deliver it. And I can be, and even if you didn't check my driving license, it didn't affect you. Even if I get 2 or 3 dents on that car, I still delivered that thing. That was more important. The delivery of that good was more important. I came back and you were okay, happy. ठीक है, 2-3 जगह dent लगा, doesn't matter. लाख रुपए की गाड़ी है, किसी से हथौड़े मरवा लूंगा, 2-3 dent निकल जाएंगे, कोई problem नहीं है. But when you have a Mercedes car for which you spend 1 crore, will you be able to throw your keys on me in the same manner?
So it's like the risk of losing versus risk of gaining.
So what is the quantum?
Opportunity.
What is the quantum? Right.
Loss versus gain.
Again, how dear is that car to you? So if you have a 100 crore asset with you, you will not value that Mercedes also.
Yeah.
You may have emotions towards it, but if it's very urgent, something like delivering medicines for something who is about to die, ले जा Mercedes भी ले जा, ठोकते हुए भी लाएगा तो कोई फर्क नहीं पड़ता.
Yeah. Right. This is the value. You're talking about the value and.
So when I am dealing with my client, it's not only about what money they are investing, but what stage of life. Besides that, what is their monetary strength? What is their overall financial strength? What is their overall wealth strength? All that is taken into account when their money is to be invested. And how are they going to utilize the money or use the money? And at which stage in life? I come across youngsters who have crossed this difficulty of buying a house because their parents will be bequeathing them houses. They are into good jobs. Okay, so when I discuss with them investments, I tell them it's important that you plan your life better than plan holidays. Let us do an SIP. You accumulate some money. After that, from the annuity that you draw from that corpus, can ensure a holiday every year for the next as many years you want to. So if you are here on the planet only to create memories, you still need money for it. So let us accumulate some right now so that you keep creating memories. So it's a different usage of money for them. There would be others who would be saving money for their daughter's education or daughter's wedding, which is a very important juncture in any man's life in India.
Yeah, Indian. Yeah,
right?
Yeah.
In Indian context, it's very, very important. But that too is changing. Is it only daughter's wedding or giving an asset or a house to a daughter?
Hmm.
Okay, it's also important that whether the daughter is able to give back to her parents. Now, if the father has been doing so much for her daughter, when the daughter gets into employment, would she not want to do something for her father?
No, I'm sure.
Of course. But then it's the husband and the wife, the daughter and her husband. And whenever she has to take a financial call, it's the husband who intervenes, right?
So that that's
She's not able
interesting.
to
So,
take independent call. If she saves some fraction of her money, keep it aside, she can be using it the way she wants to.
but see, my question is, why would we not empower our daughters to
Yes.
take a decision of the money they earn? What does the husband have to do with her earnings?
That is what I discuss with my women clients. Say, when do you get financial freedom? All your life, you are told that when you get into employment, you get financial freedom. Tell me, when you got into a job, did you get financial freedom?
So I have a very, how would I say, so my viewpoint, and I tell girls that you have to think about your financial well-being. And this is how I motivate them, that if you look at history, if you look at mythology rather, Sita Mata would have never thought that she'd be leaving the castle and going to the jungle and having kids there. Or Yashodhara, Siddharth's wife, would have never thought कि husband एक दिन ऐसे छोड़ के चला जाएगा. You need to think about your financial well-being. थोड़ी सी चीजें खराब होंगी, थोड़ी सी चीजें सार होंगी, then they'll get used to it. Your financial well-being is your priority. Nobody will come and tell you that your financial well-being is my priority. No, you have to own it. And this is what I tell my girls, my team, whoever is there when they come for an advice, and I tell them this simple thing: your financial well-being is your financial, and not just with family, even with office. It's not like that your husband is making good money. If you get increment, don't get increment, do not get good bonus. It doesn't matter. It should matter. You're also working equally hard. So this is my take on financial well-being, and this is what I suggest to girls who are in my team or who come for a suggestion.
So my suggestion to young girls who come in for advisory with me is set aside some money for future. And whatever, if you've planned your future right, and we've done reverse calculations for it, how much you need to save for the future, whatever is left in the present, you will be able to enjoy whatever money you have in the present itself without worrying about how much you need to save anymore for the future. Because what you're doing is, as soon as the money gets credited into your bank, you set aside some for the future, savings it for long haul. Whatever is left with you, you use it in the present, enjoy the present. And you very well know that from the savings that I'm making, I'll be enjoying the future. That is your financial freedom. So what the equation that I give them is, income minus expenses is not savings. Rather, income minus savings is expenses. And this is the financial freedom equation I give them.
So it's not a formula. It's basically the principle that you want people to apply.
Right. So save first. And of course, you should know, say, if I just put it numerically, if you are able to live by 100 rupees, you can do 90% of it and still be living as much. So even if you take away 10% of it as savings, it will not affect your life or living standards much. So whether you're living by 100 rupee or 90 rupee. But that 10 rupee
Yeah.
you're accumulating over a period of time, over 30-year period, it will accumulate to become so much that you enjoy your future as well.
Good, very, very good advice. I think, very pragmatic view towards money. Nice, very nice.
And yes,
Thank you very much.
girls need that kind of freedom. Well, again,
Even boys, because I come across many people who are, in my view, obviously they have the person who's going through it is a different view, is more focused on saving for their children than living the life that they have. But that I think very Asian mentality. But this is a very good.
This is a beautiful song from movie Pinjar, and where the line goes कि बेटे को देती है महल अटरिया बेटी को देती परदेस. We will get pardes. Need to think about. So boys will inherit a lot. Girls, yes.
नहीं, अब तो बेटे और बेटियां बराबर ही है. बेटे भी
It's the
परदेश
biggest
चले
lie
जाते हैं.
ever. Biggest lie ever.
नहीं, बेटे भी बाहर चले जाते हैं और अब सरकार ने भी जो दिया है कि इनहेरिटेंस लॉस के हिसाब से बेटे बेटियों को एकदम बराबर करता है. So इसमें
now the times are changing.
हाँ, मैं
What do we
बेटे
do
और
about the mindset that we have now?
mindset की प्रॉब्लम तो
जो अब ingrain हो चुका है. What do we do with that? आप
See,
बुक में कितना भी बोल दें. What do we do
अच्छा,
with the mindset that we have, which is ingrained?
मैं एक सोशल सर्विस इंस्टीट्यूट में एमबीए क्लासेस भी लेता हूँ. तो उसमें अपलिफ्टमेंट ऑफ विमेन फ्रॉम दी लोअर इनकम ब्रैकेट उनके लिए कैसे वर्क करते हैं. मैं जो लोअर इनकम ब्रैकेट में डिफिकल्टी देखता हूँ वो मिडिल क्लास में भी देखता था. दूध का ग्लास बेटे को देते हैं और बेटी को बोलते हैं कि ठीक है भैया है, उसको 3 रोटियां देते हैं, इसको 2 रोटियां. आई हैव सीन ऑल दैट.
Yeah. You're right. That that difference
लेकिन ये
between
कौन
how you
करता
treat
था?
your
ये
boys.
दादी ही करती थी या मम्मी ही करती थी?
This never
क्योंकि
happened in our family. I mean,
मैंने कई जगह देखा है कि ये दादी और मम्मी ही करती थी, ये पापा और दादा नहीं करते थे.
Yeah.
So
actually, this is a very
it was not brought in by men, it was brought in by women. That is what I'm saying.
You're hitting a very the very valid point, and I think we talked about it in one of our earlier episode with another guest, and that women discriminate against women more than men tend to discriminate between
the problem was financial dependence. Say a woman knows that she's financially dependent on the male, whether it is the grandfather, father, or the next generation, which is the grandson. So we need to take care of him because this is the guy who is going to be at the helm of the affairs 20 years later. If we don't take
and will take care of us, yes.
If we don't take care of him today, he will not be taking care of us tomorrow. But times have changed. Girls are stepping out and they are able to manage their own finances. They are earning their own bread.
Yes, I agree.
So I think managing money was more of a masculine thing of the past. Today, managing finances and money is equally for men and women.
I do that practice with my husband. End of the year, I'll block his calendar, like literally block his calendar. And I'll tell him, this is how much I've spent on travel because I travel a lot, personal reasons. This is how much I've saved. And this is how much I've spent on gift. Rest, chiller amount, I don't give him any hisab kitab. But this is the equation. And then he's like least interested and least bothered. Yeah, you have saved, you have done. It's okay. It's fine. I think you know what you're doing. He's not even interested in what I'm saying. I was like,
but this should be a very serious level discussion because it's responsibility.
Yes,
and that is where
that's what I don't like, that I've put in effort and I want you to know that I am capable of doing these things. And again, there are places where I've made shift and I want him to understand that why this shift was made. You're handling it. It's okay. Take care of it. I don't want it. Please pause. So yeah.
That's a
You
typical
don't need a
husband and
marriage
wife story.
counselor, but you need a
I
friend.
know, I know. It's a typical husband and wife situation.
No,
So
but
yeah,
yes,
we will not get into
I
it.
think
Yeah.
if she and he put each other on the same pedestal, they can be doing much better than being getting into a contest or being more masculine and she's more feminine.
Yeah.
No.
Yeah. Yeah.
That is why I'm more into about beginning early, diversifying, taking chances early on. And again, if you are say around 70 and you want to bequeath, then you need not play safe.
I
Then you invest 100% into equity,
know.
bequeath as much as you
Enjoy.
bequeath
Yes.
as much as you can. दे के जाओ जितना ज्यादा हो सके, कम दे के
Exactly. Yeah. Yeah.
So
High risk, high return.
after you've taken care of all your responsibilities and all your expenses are taken care of, say there would be some annuity which is paying your all expenses, then you can be taking chances here beyond a point of
Yeah.
time. It's not about taking a chance, it's about taking informed decision of multiplying your wealth. That is how
Yeah. 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 Yeah.
taking chances is how investors would like to.
Well,
Yeah,
yes,
yeah, yeah,
we
yeah.
talked
No,
about
very pragmatic and very good
yes,
advice.
and we did talk about mutual funds, stocks, enjoying life. Uh, it's not an investment, but still people want to buy it, and it's a house.
Yes.
Huge responsibility. Huge responsibility. From a financial advisor point of view, I just want to understand whether you should go for a house, not go for a house. What should be your strategy around that?
Okay, there are certain things which have an emotional appeal. Okay, somebody who never owned a house or somebody whose previous generations did not own a house would be keen on buying a house as soon as he or she gets into employment. But then, employment is not fixed. You are not married to the company, and company is also not married to you. They can also move you around. So it's not about being a non-performer or a performer. Even performers can be required elsewhere, and non-performers definitely can be hit here and there and be moved on, asked to move on. So there is a lot of difficulty if you buy a house early on in your career. But then, whatever money you can save early on will come good to you.
Yeah.
Because
So
people
if you
say,
have the cash, then you can always buy the house whenever you want.
right. So
Yeah.
see, setting aside money is difficulty. Now, today you have instruments to set aside money. Now you have instruments where you can put your money away. So it's not that the money is always available to you and you may spend it. Locking it for long term can be one solution if you every time can withdraw from it. So there are certain lock-in kind of products also. Otherwise, if you just put it into capital markets and give it some time, they will grow faster. Say, if you're looking at the growth in property prices also, equity markets at times outbeat or at times do better than what property prices do over long term. So if you started at 24 your employment and say you still are not stable till 35, it's good to stash away that money into investments and then buy a house at 35 when you are into say stable and you know that this is the city where I'll be stationed in for another 10, 15, 20 years. And that is when you should ideally buy a house, not in the first year or first couple of years when you got into employment. Because that would get
So you're saying that don't take emotional decisions around money, take more pragmatic and more realistic decisions
and of
around
course,
money.
say the house that you buy today, most of the times the returns of rent on it is not more than 3%.
I see.
Yes. So if you're buying a house worth a crore, you can be paying just 25,000 rent and be using it. I think it's more practical in the initial years of your career. Of course, later on, you need to own a house because you need to have a permanent address. And some people I know of never bought a house. They believe that fools build houses and wise men live in them. So keep middle class people cannot afford a house in South Bombay.
Yeah.
But you have middle class people who are manning these offices in South Bombay. So if you own a house north and you commute all day, you will not have energy to live through the week. You will only live through the weekends only.
That too, you'll catch up
Yeah.
with the sleep and you
So-
want to just
That-
relax and not go
that is-
out again.
That is what is happening in other cities in India also. Bangalore, Delhi. The cities have not been made as if, say, you can reside and you can walk up to your office.
You
Yes,
can-
when people
yeah,
ask
it's
what's
like-
the plan from weekend, yeah, just move enough that people don't think you are dead. That's it. You just don't want to do anything on the weekend.
It brings back to my, age-old tagline that slavery never ended, it just
It just
turned
turned
economic.
Yes.
But I think, yeah, very good discussion,
Yes.
and Ajay, I heard that you also write poetry.
Mhm.
So we would like to end this episode with a poem by you.
Okay, it's a very short one. I think I've done a lot of talking today, so I'll just keep it very short. Just an iteration. It's a very positive one. It gives me a lot of energy. I wrote it around 1996.
Oh, nice.
Okay. And, I was then in college, and at times you go through certain phases then. So think of me as somebody who's only 18, 20 years old and not somebody who is 48 today.
No, we will not talk about the numbers.
Age is just a number.
So I'm not passing on any wisdom. So the verse is, I wish I weren't. Alas, I am, so I will. If I weren't, I wouldn't. Cause I am, so I will. If I wouldn't, I'm not. But I am, so I will. I can, so I shall. I will, for I am.
Nice,
Very well put.
nice.
Well,
Thank you.
thank you. Thank you so much, Ajay, for coming to our show. It was really putting some ideas in again. We just know what we know. Someone else comes in and gives their opinion, which was quite enlightening today. Thank you so much for listening. Do visit our website, thelielama.com, THELLIELLAMA.com. Do let us know if you want to come on our show. We'll be more than happy to host you. Thank you for listening. Over to you, Rajiv.
Thank you. Thank you. It was a wonderful discussion.
Thanks.